Hey guys, Mike here. So today we're going to talk about Palantir stock and Sofi stock news and what we have of it. Obviously, it's been a rough 2022 for either one of these stocks, or pretty much anything to do with technology for that matter. And so I'm going to show you exactly what is happening to Sofi stock and why we could either see another fall of anywhere from 10 to 15%, or a big rise up over a short amount of time. And I'll show you the data for each one of those in the chart to show you exactly what is happening on both fronts. Obviously with Palantir, earnings coming up next week. And so, what's been happening on earnings for pretty much most of these high growth stocks? They've been getting hammered, okay? Even if they hit their numbers, doesn't seem to matter, but it is all about the forecast, okay? The good news is already down massively on both. So that's less downside, maybe more upside, we shall see. So if you're getting out of it, hit the like, subscribe button. And let's get into Sofi stock first, and let me show you exactly what is happening. And first of all, let's just start off here by acknowledging that fintech has been destroyed, right? Especially most of them after earnings. You got Square down 62%. You got PayPal, which got nuked after earnings, by the way. It's down 63% right now. You go over to Upstart. Upstart has been destroyed. It's down 75%. Then you go to Lending Club, is another one that got nuked after earnings. This one's down 65%. Actually has recovered a little bit after earnings. And then when you look at Sofi, believe it or not, that's why I say there could be more downside. This one's down the least. It's down around 47%. So we haven't got to halfway yet, but obviously earnings is coming up the beginning of March, I believe. And you just look at all the resistance above it to have to move. But this right here shows exactly what's happening, guys. This is traditional bank stocks versus fintech. And just look at what you got here. Traditional bank stocks are anywhere from flat up to 15% since beginning of December. And then you got all the fintechs down anywhere from 43 to 60%, for crying out loud. So this shows you exactly what's happening. And this is happening because institutions are obviously rolling their money into these other bank stocks right here, the traditional bank stocks. But it's also happening while traditional bank companies are closing their branches at record numbers, and Wells Fargo, of course, leading the way here. And, I challenge you to go out there and find like really bad news for those fintech companies. I mean, actual bad news, whether they're losing customers, the CEO's embezzling money, whether it's Sofi, whether it's Palantir, whatever, where are they losing contracts? You don't see any of that, right? I mean, what you see is the forecast may not be what people want to see, obviously, and disappointing when they do the earnings. And that's why Sofi is going to be critical, okay? Or really more importantly, it's just the market, guys, trying to price in all of this wave of crap that has come down on them in 2022, which is how many rate hikes are going to be? How big is it? How high the interest rate is going to go? Is the Fed going to allow their balance sheet to shrink this year? What's going on with Russia? What's going on with the commodity prices? What's happening with inflation hitting record new numbers? All this stuff that's just all hitting at once. I can't remember a single time in the market where we had this many things going on at one time. And so that's what's really happening more than anything else, not per se the companies themselves. And so, one thing also that's really holding Sofi down and will continue to hold it down until it finally makes a turn is they're being shorted to death. Because as you can see, the short interest has climbed almost 21% on Sofi, with the utilization rate being almost 94%, which means when they get to 100, there is no more shares to legally borrow to short, okay? And so that is huge. And so this is what I was talking about at the beginning of the video, where I said this stock could absolutely drop 10 to 15% more easily because it is being so shorted right now, okay? And once earnings happen, which is definitely in a few weeks, but when that happens, what do you see in the fintech stocks? They're dropping after earnings. They almost have to report perfect earnings, perfect forecast, everything for that not to happen. And, the other thing is, this is what I'm also talking about. I said it could absolutely move up very fast, because what happens when markets shift, and we've seen this already before, as soon as it hits a certain level, they'll pop 6-7% up, maybe even more. And maybe what some of this stuff that they're trying to price in happens, or maybe the Russia thing goes away. We don't have to worry about that anymore. A lot of FUD goes away. And if the markets start to lift up, what do short sales have to do? We've seen this movie before, especially if it's highly shorted. They have to start covering because they don't want to be caught, okay? They have to take profits, which means they got to buy back the stock. It's going to help drive the stock up. So it can go either way. But, and plus, when is this happening? at a time where SoFi is going to get the most exposure it has ever gotten in its existence, the Super Bowl at SoFi Stadium that's happening today, okay? It's going to be over 100 million people watching the Super Bowl. All right, you're going to see SoFi logos and they're going to talk about it everywhere. They got a commercial coming on there. And so you're going to see a lot of exposure for them today. So we're going to see how that works out. Obviously, we won't know about that during the next earnings, but we'll see what it does to their website traffic, which is where they get all their customers from. And you can see institutions aren't shying away from this stock even as it's being shorted. Because as you can see over at our friends at Tip Ranks, you still got analysts covering this, giving it buy ratings. And if you look right here, just 7 days ago, it had another buy rating. All of them are consensus around a $20 price target, which is around, I suppose, a 61% upside. And you know, you're looking at Morgan Stanley, Citigroup, Jefferies, Wedbush, all over the last 30 days, covering this stock with buys right now. And if you look at their website traffic in the quarter we're going to be coming up on, the unreported period, going into December, it went up, right, during that period. And so that's where they get all of their traffic from, or all of their customers from, which is key. And so it would definitely be interesting to see what happens next week if the stock gets a boost. But of course, it's all going to depend on the market, right? If the market keeps, you know, crapping the bed, so to speak, and going down, and you know, all these different things that the market seem to be worried about and trying to price in continue to persist, you know, these stocks are going to go down with it too. That's just the way it is, okay? And you see, SoFi has not gone down as far as the other ones have by almost like 10 to 25%. And so that's why I say there is more room. Brace yourselves. But if shorts have to start covering, baby, and they have to start covering, oh yeah, the stock's going up for sure. Now, of course, you see all the resistance, right? Going up, there's a whole lot of levels it would have to get through. But, you know, and not all these companies are made the same, right? None of them have the same business models or anything else. So, you know, that's going to be a different story. So that's SoFi. So now it's going to Palantir. There's way less to cover on it because they've been super quiet in the news, right? I mean, you go on their website, there's like hardly anything on the website, or hardly anything in the news. Again, no bad news, just no news, right? And so they're getting punished severely by this market. As you can see by the chart right here, I mean, it was down 56%. It's made its way back up a little bit to around 50%. But you see all the resistance levels this stock is going to have to get through. And earnings, you can see, we'll click on this right here, coming up around the 17th. Which, you know, the good thing to think about is they have had partnerships in the fourth quarter that they forged. We'll hear about on earnings, which is DuPont Therapeutics, Merck, Kinder Morgan, MSP Recovery, Hyundai. And so, you know, if you just look down, this is going to definitely help them achieve their 30% revenue growth forecast. As you can see some of the numbers here. And of course, this is what we got to look forward to during the fourth quarter. You're looking at revenue of $418 million, adjusted operating margin percentage of 22%, full year 2021 of $1.5 billion, which is a 40% revenue growth. And then you're looking at $400 million plus from $300 million of adjusted free cash flow. And then more importantly, they're looking for that 30% revenue growth going over the next 4 years. And of course, some other things I'll be looking for this week coming up, because that's when earnings is, you know, I want to know Foundry for builders, how many people are signing up for that. It's a subscription basis now. You know, who's into that? We know they're into all these different industries, obviously. And so that's going to be one big thing I'm looking for. The other is going to be, have they forged any more, you know, business partnerships with crypto companies, right? Whether they're looking for help with money laundering or whatever else they're looking for, because that is going to be a huge industry over the next 10 to 20 years. And so they're kind of getting on the ground floor of that. And they can work on the government side and the commercial side on that. The other one's going to be the commercial contracts versus government, right? Commercial is growing pretty good. Did they increase it even more? Because remember, they got like 3 years of contracts like locked up already. You know, obviously you want to keep building those contracts up, but they have a lot locked in already from the government and even commercial side. But something else, you know, which is kind of odd to think about, and I've never had to cover this with a company, I also want to hear about the gold, right? They bought $50 million in gold in August. What's happening to gold in this environment we're in right now? It's going up. You can see this upward trend line since they bought it. Here it is right here. And I'm really hoping somebody asks this question on the earnings call about, you know, is this what you saw coming? Is this part of the black swan event or something you see coming? And that's why you bought this in August. It has something to do with Russia maybe invading Ukraine. Did it have something to do with inflation just keeps skyrocketing? And, you know, what's the deal? I want to know, because not too many companies ran out there and bought $50 million in, you know, gold bars. You know, they just didn't do that. It's kind of odd, right? And so it's going to be interesting to see. But what happens to gold in an environment like this? Sometimes it can really rocket, right, and take off. And this is what people have been waiting on for this to happen. Who knows what's going to happen, because they've been waiting a long time for it to happen. But if it does, they got it just sitting there on their balance sheet. So it's just, you know, another asset they have. You know, but the other thing I also want to hear about is, obviously the SPAC investments are crap right now, right? All the SPACs have gone down. All the investments they made have gone down on that. I want to be able to see that, see where it's at, what their thoughts are on that as well. Now, obviously, those are customers. I think almost every one of them is a customer, so they're actually still generating revenue from them. But as an investment, doesn't look good, right? And so that we got to see as well, which is why you definitely can see them get punished after earnings next week. But, you know, there's a lot of big growth stocks reporting next week. It's going to be an interesting week. Monday is going to be kind of a tell sign to see how the week is going to start out. Obviously, with not only Canada, but America telling all the citizens to get the hell out of Ukraine, I believe it is, then, you know, that's not a good sign at all, because obviously their intelligence is saying something of what's happening. So, you know, that's a big deal. And I've seen people say, well, you know, in 2014, Russia invaded. I don't know who the heck it was, to be honest with you. And I'm like, dude, 2014 was a totally different time. You had like basically almost like zero inflation going on, zero interest rates. You know, all it's a totally different time. We were in a bull market at that point in time. So, you know, big difference in that. This is just something else like kerosene on a fire. It's already going in a way. So, and why? Because the only big real reason, not the war, because it would spike the oil up even more than it is now, okay? Which is not good for us, or anybody for that matter. So anyway, let me know your thoughts on that, on both companies, how you think earnings is going to go next week for Palantir. What do you think about Sofi? You think there will be a short squeeze, or you think, they'll just keep shortening it to death and keep pushing it down and get it under $10 even before earnings, okay? So I hope you enjoy the game. Have a great day, and I'll see you tomorrow.